Hi, I'm Nels Matson, a CPA with Kerkering Barberio, and we've put together a presentation covering areas of the coronavirus stimulus packages that we've been getting the most questions about. And I'd like to start with a high-level look at the packages. So there are three acts that were passed within this last month in March. The first of these was the Coronavirus Preparedness and Response Supplemental Appropriations Act. This was signed into law on March 6th. It provides $8.3 billion in emergency funding for federal agencies to respond to coronavirus. Of these, $7 billion is in disaster loans to small businesses that is offered by the SBA. The second act was the Family First Coronavirus Response Act. This was signed into law on March 18th and is designed to provide assistance to employees and households affected by COVID-19. The third act is the Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act. This was signed into law this past Friday, March 27th, and it contains many elements to aid small businesses. Among these are the Small Business Paycheck Protection Program, also known as the PPP, and there are many business tax provisions, and as well as stimulus payments for individuals and unemployment assistance. In these three acts, there are loans and credits that are available for immediate use to small businesses. There are two small business loans, the Emergency EIDL, which is a federal disaster loan, and the Small Business Paycheck Protection Program loan, also known as the PPP or a 7A loan. There are also employer tax credits and paid sick and family leave credits. So what is the Emergency EIDL, also known as the 7B2 loan program? It is an SBA, a Small Business Association loan for disaster relief that was initially funded in the first act, and additional funds were put forth in the CARES Act, and also some adjustments were also put in place in the CARES Act. So who is eligible for the Emergency EIDL? Businesses with full-time equivalent employees of 500 or under 500 are eligible. And the amount of this loan is up to $2 million, but is limited to the economic injury of the business that is determined by the Small Business Administration. How can the proceeds of the Emergency EIDL loan be used? They can be used for working capital of the business. So this is a little more versatile than the 7A or the PPP loans that I'll talk about later. So that's one of the big benefits of the Emergency EIDL. The interest rates in terms, the maximum interest rate for for-profit businesses is 3.75%, and for nonprofit, the maximum rate is 2.75%, with a term of up to 30 years. Is collateral required? The nice part about the changes that came forth in the CARES Act is that it increased collateral or a business owner personal guarantee from $25,000 to $200,000. So this also will increase the speed of the loan process. Where do you apply for this Emergency EIDL? You can apply for this directly on the Small Business Administration website. Another really important part of the Emergency EIDL is you have this opportunity to apply for an advance of $10,000 that's paid they're saying it's being paid within 36 hours. So it's allowed for the same uses as the rest of the loan. A big part of this, though, is that there's no repayment required for this $10,000. And even if your Emergency EIDL application is denied, repayment is still not required for this advance. So now I'm going into the Paycheck Protection Program. And this is where we've probably been getting the most questions. So what is the Paycheck Protection Program, or the PPP, or you probably heard it called the SBA 7A loan as well. So what is it? It's a small business administration loan with a streamlined process in which all or portions may be forgiven under a loan forgiveness program. So who is eligible for this loan? Businesses with fewer than 500 full-time equivalent employees. It's expanded, so sole proprietors are eligible. Businesses with NAIC code beginning with 72, which that includes food, services, and accommodation. So for these businesses, it's the 500 is measured by location. So if there's less than 500 per location, then they are eligible. Franchises are eligible that were assigned a franchise ID code by the SBA. And the business had to have been in operation before February 15th of 2020 and have had employees or independent contractors who were paid. One part of the application is that you do have to certify that your business has had economic conditions that make this loan application and make these proceeds necessary for your business. So what is the maximum amount that you can borrow under the Paycheck Protection Program? So the maximum amount is the lesser of $10 million or 2.5 times the average monthly payroll costs that were incurred during the year before the loan origination date, and the amount that was taken for the EIDL that we talked about earlier that was refinanced into this loan. So what are payroll costs that go into this calculation? So the things that you'll include for your payroll costs are salaries, wages, commissions, and other compensation, cash tips or equivalents. You'll include payments for vacation, parental, family, medical, or sick leave, dismissal or separation allowance. Also included are group health care benefits, including insurance premiums, payment of retirement benefits, and state or local taxes on employee compensation. So those are all included in payroll costs for purpose of this calculation. What is not included, what's excluded? Compensation of an annual salary that is greater than $100,000 prorated from February 15th to June 30th, 2020. So the monthly amounts that are prorated would be like $8,333. Anything over that per month would be excluded. Payroll taxes and income taxes are excluded. Compensation of employees that their principal residence is outside the United States are excluded. And qualified sick leave wages where credit was taken under the Family First Coronavirus Response Act. Those will also be excluded. So what is the application? Oh, and also I don't want to forget our sole proprietors. What is included for their payroll costs? It will be the payment of compensation or income that is a wage, commission, net earnings from self-employment, or similar compensation that is less than $100,000. So that will be included in payroll costs for sole proprietors. The application for the Paycheck Protection Program for the PPP is through a private lender that's qualified by the SBA. So how does the loan forgiveness portion of this work? The following that are forgiven, the following that are paid in the 8 weeks period following the origination of the loan, payments for these costs will be forgiven. So for payroll costs, meeting the same definition that we just defined, interest on covered mortgage obligations will be forgiven, rent on covered lease obligations, and covered utility programs. And covered just means during that 8-week period. Loan forgiveness can be reduced by either a reduction in of 25% employees' salaries, and that's only for those that are under $100,000 annualized, or a reduction in number of full-time equivalent employees. And there is no reduction in forgiveness if salaries are increased or employment is restored by June 30th, 2020. So what documentation is necessary to provide a lender for forgiveness? So these are things that you'll want to make sure that you have to provide your lender. You'll need to provide them with the payroll tax filings so that you can verify the number of employees and pay rates. Canceled checks will be, and receipts to verify payments of mortgage payments, rent, and also your utility payments. And another really important part of this is the forgiveness of the PPP loan is not taxable. So credit that is available under the CARES Act is the Employee Retention Credit. And so what is this? It's a credit that an employer can take against employment taxes of up to 50% of qualified wages to each employee, up to $10,000 per employee. And the business had to have been in operation during 2020 to be able to take advantage of this credit. So what periods does this cover? A business will be able to start taking this credit once the gross receipts fall 50% below the previous year's quarter. And then it will go until the gross receipts reach 80% of the previous year's quarter. So if you're taking advantage of the PPP loan, you will not be able to also take advantage of this credit. Or if you're taking advantage of the paid family and medical leave credits that I'll mention next, you will not be able to take advantage of this credit either. So that's something to keep in mind. So the tax credits that are for paid sick leave and family and medical leave, what are they? What is the credit for paid sick leave? It is for 100% of qualified sick leave wages taken between April 1st and December 31st, 2020. So note that this doesn't start until for wages until tomorrow. The credit cannot exceed $200 per day per individual, and it's limited to 10 days. For those with COVID-19 or experiencing symptoms, the credit is $511 per day. What is the credit for paid family and medical leave? The credit for this is 100% of qualified family leave wages that are taken between April 1st and December 31st, 2020. And the leave has to be related to COVID-19. Credit is limited to $200 per day per individual, and it is also limited to 10 days. So some other items to consider when you're thinking about individual cash flow, or maybe your employee's cash flow, is there was a provision that put in place individual stimulus payments in the CARES Act. So there will be $1,200 that will be passed out. These payments will be passed out within the next 3 weeks, is what we're hearing, and they'll either be sent through direct deposit if taxes were refunded through direct deposit last year, or they'll be mailed out in a check. So there will be $1,200 for individuals, beginning phase out at $75,000 for your adjusted gross income. For married filing joint, it will receive $2,400 for those making that had under $150,000 of adjusted gross income. And so it will phase out after this $150,000. And then there's additional $500 that will be paid out per child. Another thing to keep in mind are the unemployment provisions that are in the CARES Act. These are expanded to unemployment. These expand unemployment to self-employed individuals or those that wouldn't have sufficient work history to qualify under state law. Those who currently qualify for unemployment under state law may also qualify for an additional $600 per week. Future topics that we can discuss in upcoming webinars are temporary relief of net operating loss limitations, an increase in the business interest deduction, bonus depreciation, temporary relief of 401k and 403b withdrawal penalties for those with COVID-19 or affected by COVID-19, charitable contributions, and we can also discuss further on the PPP loan forgiveness and more depending on your interests. And if you have any questions, please contact the Kerkering Barberio team at 941-365-4617. And thank you for your attention.